What is going on, guys? It is Josh back with JF Trading. I hope you all had a lovely weekend. I kept it pretty calm myself. Didn't really do much. Did some charting. Hung out with some friends, some family. Saw the parents. It was a good time. I'm here to run you through a couple of stocks pre-market. We were having an interesting market right now, to say the least. Relatively flat. A lot of news going on though in the world right now. We have Trump overseas. Trump just signed a $100 billion weapons package for Saudi Arabia. A lot of issues going on now with the defense stocks. Those are in play. A lot of really big runners that have gapped down pretty tremendously. This is obviously one of them. LJPC, Pharmaceutical, is one of those sinister, horrible, dry ship stocks. Reverse split pop, reverse split plop, reverse split pop. So if you guys have been paying attention to this sucker, we ran from 28 bucks to 35 in a day, and now we're back down to about 29.50 right now. So we're coming full circle. I'm sure a lot of people got hurt here. Hopefully, not too many of you were trading this. This is always one of those issues where you get blown out of the top, and things can go south very fast, very fast. It doesn't even leave you room with time to get out, which is the scary part. So imagine buying up here in the 35s yesterday, or excuse me, on Friday, and now you're waking up to some pretty brutal losses. I had one of my viewers reach out and recommend that I cover Corning, and this is obviously a stock that I keep track of pretty regularly, but I obviously haven't looked at it in a while on the monthly chart. And if you can see, this is exactly the setup that Bank of America was in pre-Donald Trump election. If it wasn't for his W for the win that he pulled out, I don't necessarily think that we traded higher like that we did in bank. So if you can see, this big green bar up here is the bar that I'm talking about. Obviously the frequency of this chart's much narrower, but if you can see, we kind of came up on this $20 level. We had some sort of technical fundamental reason to push us higher, and we got pushed higher. So let's see if this is the case in Corning. I definitely think this is a great setup. It's actually a great opportunity to even buy some options. I'm usually an options writer, but these are the types of setups. If we were able to trade near this $30 level for some time, would give me some confidence to buy a number of these options, see if you can't play Corning into the 40s and 50s over the next maybe 6-7 months. I definitely think a stock like this could be in favor, relatively speaking to other industries. We've been trading sideways for the most part of this year. No benefit to the Trump bump in the early Novembers of 2016. So this stock is still waiting to get out of bed. Corning, they're still trying to figure out what exactly it's going to take for them to get back up into that $40 to $50 level. Obviously, that's some real big uncharted territory. We haven't been there since basically the turn of the century in the 2000s. So Corning GLW is a great stock to keep an eye on. Great call, Mahdi, I believe it was. Great call. Thanks for bringing my attention to this. I'm obviously going to keep a very close eye on it. Let's pull up some defense stocks. Let's go Lockheed. Lockheed's got such an incredible chart. If you bought this thing at any point over the last 10 years, you made money, except for maybe around here in this little range. But again, Donald Trump signing this big aid package in regards to weapons. So all the defense stocks are up big. Raytheon's gapping up 6%. Lockheed's gapping up 3.75, I should say. So the defense stocks are back in favor. They're back in the news, which kind of scares me, kind of doesn't. But we'll see how these stocks handle this sort of pressure. But if you can see, we've been very strong. We've been trading towards the high end of this range for quite some time. We're actually above it now, which is a statistically significant move in terms of deviations. But in regards to defense stocks, it's best to keep an eye on those. Obviously, with all the tension in the Middle East right now, there's going to be a lot of he said, she said. So keep your senses, keep your eyes on Lockheed, Raytheon, Leidos, all these big contractors. These are the guys that make the money, that get the contracts from the government. But Ford's gapping down a little this morning here. Nothing crazy, but Ford's actually been a lot of the car manufacturers have been out of favor for quite some time now. I'm trying to wrap my mind around the move. Excuse me, we're gapping higher. I don't know what I'm saying. We're gapping lower. I'm trying to wrap my mind around the logic behind that move. I want to say it has something to do with rising interest rates, and that the loan and the credit departments at a lot of these car institutions are not able to make as much money off of leasing. Don't take my word for that. That's just kind of my foresight. I have a feeling that a lot of the low interest rates situations is going to come back and bite a lot of the car manufacturers, the retailers, the ones who take on large amounts of debt that don't necessarily have very marketable products, I guess you could say. Very very variable priced products. So a retailer has clothing, a car dealership has cars. So how liquid are those products? You tell me. But in regards to the overall markets, guys, where we're at. We actually finished the week last week almost unchanged. We were within 1% or 2. So it seemed like a lot of volatility, but we bounced right back to some recent levels, and we're kind of just flat. So there's such a two-sided market right now. There's so many guys on the long side, and there's so many guys on the short side. They're just trying to load up to figure out when's the right time to really smack it. But this morning, let's see what we're doing. Looks like we're trading flat, if not a little higher here, about 238.53. Let's see if this run continues or if investors will pull the SPYs back and continue us lower into that previous trend. A pivot to look out for is the 236.79 level. Obviously, it's going to test, hopefully, today the 238.71. If it does, then we're back into that high range of the 0.5% to 0.75% range at the top. And if we can crack that 240, then we can see new highs. But I don't see that happening without some sort of geopolitical announcement or some sort of catalyst to pull the markets higher. So keep an eye out, guys. Thanks for watching. If I messed anything up, comment down below. If you'd like to recommend any stocks, also comment those down below. If not, I will be back with you tonight or in a few hours with the aftermarket edition, guys. Best of luck trading. Don't go crazy. Sit on your hands if you have to, but make some money, guys. Be smart and keep your risk small. Cheers, guys. Build the wall.